Welcome to Small Biz Life, episode 127. How the federal government is incentivizing you to have employees.
Does this sound familiar?
Oh my God, I have so much to do today.
Don't forget to breathe.
But I have almost 400 emails in my inbox and 30 phone calls to make.
Have you looked into getting a virtual assistant yet?
Oh, and I need to schedule all my social media posts.
Did you drink anything today?
I had coffee.
Did you eat today?
Did I mention coffee's a bean?
This is Small Biz Life.
Hey guys, welcome to another episode of Small Biz Life. My name's Kristin Ingram.
And I'm Jeffrey W. Ingram.
And we are a husband and wife team of small business owners who are walking this journey with you through what we call the Small Biz Life.
Yes.
Because we know that this is not a 9-to-5.
This is not a 9-to-5. And we know that there's a lot of things, especially for really small businesses, that sometimes frighten people going forward. And this is, I think, a biggie.
Yeah, I think this is one thing, I think when companies start thinking about like hiring employees, I think like we're much more likely to bring on subcontractors first because that's easy. We don't have to deal with payroll. And I think a lot of people think payroll is kind of this big scary thing. But starting in 2018, the federal government is actually incentivizing you to have employees in your business.
And that's very euphemistic. They are essentially, if you're making profit, forcing you to hire employees.
Well, if you get above a certain level, and we're going to talk about that. So we're going to talk about, this is a change in the 2017 Tax Cuts and Jobs Act. That was the big tax law that passed around Christmas. And so one of the big changes was that there's a new tax deduction up to 20% of your profit. Now it's really easy to get if your profit is low. When your profit starts getting high, or if you're married or single and have multiple sources of income on your tax return, this is going to become even more important. So here are the numbers that you have to pay attention to. If your taxable income, okay, so if you look at the second page of your tax return, and there's going to be a line that says total taxable income up near the top. If that number is more than $157,500 if you are not married, or $315,000 if you are married, that's the tipping point, okay, for this tax deduction.
And this is via household for those people who don't understand. It's not about an individual in a house.
And it's not even just about your business income. This is total taxable income.
For your household.
For your household, okay? So if you have a job and a side business, this affects you. If you have a spouse and multiple sources of income, this affects you, okay? So I know for a lot of people, you're like, well, that's a lot of money. But for a lot of people who either have side gigs or maybe have a business and a job, or maybe have multiple businesses, this is going to affect you.
Because even if we go by the IRS definition of the top 1%, we're not close to there yet.
Yeah, I mean, you figure like the $157,000 for an individual is in the top 1% of single taxpayers.
Really?
Yeah, the thresholds are pretty low, and for married taxpayers, the top 1% is about $400,000 in income.
So you're a little bit outside if you're married, but you're inside if you're single.
Yeah.
Okay.
So that's the thing. So I think people think like, that's like that's not that much money, but it really is.
And I think part of it depends on where you live too. If you live in a place that has a higher cost of living, like in the Northeast, I'm sure in California, places like that,
you're more likely to be there.
If you're in a household and married to someone, you're much more likely to be well over 100,000 and feel poor.
Oh yeah, absolutely. Okay, so and we're gonna put those numbers because we're gonna be talking about some numbers in this episode. So we're gonna put all of this in the show notes for episode 127. So you're gonna want to make sure you go check out those show notes. There's actually gonna be some valuable links in there as well. So. Okay, so those are the numbers you're looking at, 157.5 and 315. Now, those numbers are really important because if you are below those numbers, then you will automatically get a tax deduction for 20% of your business profit.
Yeah.
So let's say that your business profit is $100,000. that's a $20,000 tax deduction. So essentially what's happening is the IRS is saying, okay, your profit isn't really 100,000. We're going to give you this tax deduction. Your profit's really 80. And that's what you're going to pay income tax on. One thing I think it's really important is that does not affect your self-employment tax. So if you are a partnership or a sole proprietorship, you're still going to pay self-employment tax on the full profit. Okay, so that's one thing that's important. So why is it important to have employees? If you're above those numbers, the 157.5 and the 315,000, if you are a service-based company, which you don't want to be a service-based company, if you're a service-based company, you can't get the deduction at all. Okay, so even if you go $1 above those numbers and you're a service-based company, you don't get the deduction at all. Okay, that's why, especially like if you're in the online space, you want to be a digital product company. Okay, because if you're a service-based company and it's all knowledge-based, you're not going to get the deduction.
Yeah.
But if you go above those numbers and you're not a service-based company, then you have to have wages to get any of the deduction. So the deduction is the lesser of 20% of your profit or 50% of your wages. Okay, so if we go back to that example, let's say that you've got other household income and you've got $100,000 profit. In order to get that $20,000 deduction, that means you have to have $40,000 in wages in your business, okay, because it's 50% of the wages. So you have to start thinking about how you can get payroll into your business. Yeah. Now, if you're an S corporation, we don't know if shareholder wages are going to count. Okay, remember, if you're an S corporation, you have to have shareholder wages that are reasonable, and we don't know how those shareholder wages are going to get treated yet. I've read articles from people who are a lot smarter than me in tax, and everybody, they're going both ways. Some people are saying, yes, the wages are going to count. No, the wages aren't going to count. Maybe the wages will count towards the total profit.
And really, it doesn't even matter if you consider that the IRS rules aren't written yet.
Right. The IRS rules are not written. So the thing that I'm trying to do with my clients is we are looking at the relationships that they have with their subcontractors and saying, you know, really, should any of these people be employees or could they be employees? And that's the thing. The IRS wants you to make people employees. Okay. The Department of Labor wants you to make people employees.
Congress wants you to make people employees. Right.
Because the reason for that is because if somebody gets, you know, if they don't have work, then they'll get unemployment. If, you know, they get hurt, they're more likely to be covered by workman's comp because most small business owners don't buy workman's comp for themselves. And if they are employees, taxes are being taken out of their paycheck and remitted to the IRS on a monthly basis, which makes the IRS very happy.
Yeah.
You know, they have much fewer problems with employees paying their taxes than they do with small business owners paying their taxes.
Yeah.
So they really like employees. Okay. So there's nothing that says, you know, if you've got people who are working with you on a regular basis, there's nothing that says you can't make them an employee. Now, you know, there are a lot of benefits to owning your own business. As many of you know, you get to write off all your expenses. But, you know, if you've got employees, you know, maybe you have some virtual assistants that work with you on a regular basis that you're treating as subcontractors, you might want to talk to them about becoming employees.
And, you know, on the other end, let's say you contract your services out as a virtual assistant or a developer or whatever you do, but one business eats up a lot of your time. This is actually, you know, you start getting definitely like over 30% of your revenue from one source. That is risky for you because if something ever happens to that source, you're in big trouble. You're left scrambling trying to fill up the gap of revenue. Where it's really easy to do because it's kind of like, oh, wow, this is just, you know, it's like printing cash when you have that person. But if for whatever reason they go away, your relationship breaks apart, they go out of business, whatever it is, it leaves a whole lot of risk on you, and you don't have the monetary means necessarily to hold off to get through it, and you see lots of small businesses who have a really large client who go out of business, who then subsequently go out of business.
Right. So, especially with, your service-based subcontractors that don't have a lot of expenses, this may be a really easy conversation to have. I know, I've had clients that have had these conversations with their subcontractors, and most of the time the subcontractors are like, awesome. You mean I don't have to worry about estimated tax payments? You're going to pay half my Social Security and Medicare tax.
And they lose risk, because the thing is, a job is a long-term labor agreement. So you're still out stressing finding the work. And even if they do some of that for you, they can be a salesperson, but typically their pay gets spread out over time. And so they don't get big boosts when business does great, but they don't get hit, when business is slow either.
All right. And they can still have, other clients beside you. You don't have to take them on full time. But, I think Jeff's right that it does kind of help mitigate their risk because maybe you're guaranteeing them a certain amount of hours every month. And that's the thing. And it can still be a variable labor agreement, right? So it can still be that, hey, I'm going to pay you hourly for the work that you do. The work is going to vary just like it does now. But I'm going to pay you as an employee instead.
Yeah. And, it doesn't need to be, they don't need to come to your office. They don't, you don't need to get an office just because you have an employee. If you're all remote, you can stay remote. And I would suggest always trying to get time together every year, at least virtually, but preferably in person to team build. But, you don't need an office just because you hire one or two people. And it could be the people you work with who are 800, 1,000, 3,000 miles away.
And that's the thing. The IRS does have rules for when you have to make somebody an employee. But there's nothing that says that you can't make somebody an employee because you want to.
And I haven't done any case research, but I think you'd be hard-pressed to find where the IRS went after someone for paying someone as an employee when they thought they shouldn't be.
I have yet to find a case.
They have a form to go the other direction because they want you to be an employee, but they don't go after people who make people employees.
Right. And that's the thing. And I have actually done that research for my tax classes. I cannot find a case where the IRS has said, oh, no, that person should be a subcontractor. So the IRS is always happy when you rule on the side of making somebody an employee.
Your Department of Labor.
So if you decide that you want to do this, there's a couple things that you need to do before you start this journey. You can start having the conversations with people before you do any of this work. But here's some things you need to do if you've never had employees before. Number one, you need to make sure you have an employer identification number. Number two, you need to notify your state withholding department. So that's usually a Department of Revenue or a Department of Tax Collection that you're going to have employees. You need to register with your Department of Labor or your Department of Unemployment, whoever handles unemployment in your state. And here's the thing, is kind of if you're working with employees remotely, you do not have to withhold taxes if they're in another state.
For that state.
They're also not liable for taxes in your state if they never go there. Okay, so if it's somebody that's working virtually, you can just withhold federal taxes and not withhold state. However, most payroll services will make it really easy if you do want to withhold state taxes for them for their state. You will have to pay unemployment to your state. And if you ever lay off an employee, they would collect unemployment from the state that you are in. And it's funny because states do not handle this well. They do not know what to do because they're like, wait, no, the employee didn't work here. Well, yeah, but this is where the taxes were paid. And it gets all sorts of funky. So EIN from the IRS, that's a free thing to do. Notify your state, make sure you've got a state ID number, and then notify your unemployment or Department of Labor.
Now, here's a question that always comes to my mind in today's age of internet sales. if I have an employee in, let's say Delaware or Denmark or whatever, do I gain nexus there?
If you have an employee there, yes.
Okay.
But I would also argue that if you've got subcontractors or you've got, virtual assistants,
The
you're
state
also
might argue that anyway.
The state's going to argue that anyway.
If they find you.
Mm-hmm. And that's only, that's if you are, the thing is, like, there's a calculation that you do.
Before you go into that, though, let me reiterate what nexus is for people.
Yes.
Nexus means that you have presence in the state and you are therefore required to get sales tax from that state.
Right. So essentially what would happen, let's say that you are in Connecticut and you have an employee in...
Don't say California. It's too expensive.
And we won't do California. In Indiana.
Okay.
Okay. Because I know Indiana has income tax and Indiana has sales tax. So if you have an employee there, then the government is going to look to say, okay, you are paying wages in this state. You might have some sales in this state. And so therefore you have to pay taxes to this state. So the way it would work is if you sell something in Indiana, you would have to collect sales tax in Indiana if it's subject to tax at all, which those of you that are selling digital products, there are a lot of states that don't have sales tax on digital products. Connecticut is one of them. I know New York actually has sales tax on digital courses. So if you're selling courses and you've got presence somehow in New York, you have to pay taxes on that. But a lot of states don't tax anything.
New York is adding a tax to tax all people who live outside of the state as well, too.
Oh, yes. Yeah. And breathing. I think that's in the legislature. There's going to be tax on air in New York very shortly. This is what happens when states go broke. They tax everything. So... so you would have, so you might have to collect sales taxes in that state. You may have to pay income taxes in that state. But if it's one employee and you don't do a lot of business in that state, then that amount is probably going to be really small. And for your accountant, it's literally like checking another box to say, add this, add the state to the tax return. So it's typically not a lot of extra work to do multiple states.
A lot of it might depend on your accountant too, because some accountants might just go, well, that's another return, it's another $2,000.
Yeah, I know. Yeah. Ask your accountant. But really, it's not that big of a deal and it shouldn't cost you very much. Okay, so yes, you might have some presence issues if the person is in another state. But again, that's pretty easy to deal with. Then you want to get a payroll service. Now, the payroll service that we use for our company and that most of my clients use is called Gusto. There's a link in the show notes for episode 127. But the reason I like Gusto is because it's all online. It's all automated. And when you hire a new employee, you send the employee an email and they fill out all the paperwork digitally.
Yeah.
So it's pretty awesome. It's $39 per month plus $6 per employee. So it's really affordable too. And they handle everything. So when you put in the employee's information, they are going to do the direct deposit. They will withhold all the taxes and send them to the agencies that the taxes are for. They will file all of your quarterly reports and do your W-2s. No additional costs, no special fees, done. So if you have one employee, you're looking at $45 a month to handle all that for you.
Well, I know we were talking earlier before the show started about subcontractors, because I know you can onboard subcontractors in the service too, but I didn't realize you had to pay $6 a month for every subcontractor. I would assume only for the months they're active.
Right, for the months they're active. So, it is nice because, it handles, again, you send them an email, they put in all of their information. Everything's handled via direct deposit. So when you pay them, the money goes right into their account. So most subcontractors really like that. There are no PayPal fees or anything that they have to deal with, no credit card fees. So they like that too. And, they do all the 1099s at the end of the year. So, if you do have, let's say you have 3 or 4 subcontractors that you're paying on a regular basis, then this might be something that you want to look into for that as well.
If you have the spare profit, it might be a fine thing to do either way too. But just realize you can do subcontractors in it, which is kind of cool. But it treats them like an employee as long as they're active.
But it doesn't do the withholding for them. It just does, it just issues the checks.
The 1099s and the checks.
Right, exactly. So, but that is kind of a nice thing. And you can kind of negotiate too, like if you're paying, right now, if you're paying your subcontractors via PayPal and there's a 3% fee.
Why don't we split that difference?
Right. Yeah. Then you can say, hey, listen, I'm going to subtract $6, as a payment processing fee for this. If I'm paying you more than $200 a month,
you'll take home more. And
exactly. So
you can even use it to negotiate your prices down. Say, hey, you're at 1,500. Let's make it, 1,400.
Yeah, no, exactly. So you might have a little bit of, leeway with that as well. So,
I should have really done math before I gave that example because it's not a very good example.
Yeah, because it's not a very good example. But you could do like 1475 or something. Yeah. And then it works out better. So you need to make sure you register with all state agencies. You need to have a payroll service. You want to make sure you've got workers' comp so that if the person gets hurt, and I know it's, a lot of people think like, oh, well, we're not in the same state. They're not on my premises. But still, like if somebody's doing work for you, I don't know, maybe their computer shocks them. I don't know.
A bolt of lightning strikes the line, runs through the line, and fries them at the computer as they're making you a new banner.
Yeah, exactly. So you want to make sure, and the thing is too, is like, talk to your workers' comp person, explain like you've got employees like virtually, they never come to your location. You might get a better rate.
I would imagine it would be a lot cheaper.
Yeah. So, so that's something else that, that you're going to want to look into. And then you're going to want to look into any benefits that you currently have in your own business for you and see whether or not those are going to have to extend to your employees. Yeah. So for example, if you have health insurance and you bring on somebody full time, you have to offer them health insurance.
Is 30 hours the cutoff for that?
Yeah, so right now it's 30. I'm sure that's going to change as they start futzing with the, Affordable
Every
Care
year
Act.
you'd have to worry about that. Yeah.
Right. So, but that's something that you're going to have to look at. And that's 30 hours a week. Okay. I know a lot of small business owners, they actually don't have their health insurance through the business because having group plans is so expensive. But if you have any sort of medical reimbursement plan in your business, and I know some small businesses are doing that to pay their spouses. If you have that, if you bring on other employees, they get access to it too. If you have a SEP IRA for your retirement, that would also apply to a full-time employee depending on how your agreement is written.
Yeah.
So, if you do something like this, you're going to want to sit down with your accountant or sit down with somebody. If you don't have somebody, shoot me an email. We'll book a time and we can go through this. But this is, it's really important to make sure that you review all of the benefits that you have in place because you may end up right before you hire somebody. Because the thing, what you can do too is like, let's say that you've got a SEP IRA and people who don't have employees love SEP IRAs because they can put away a lot more money. We did a whole episode on retirement plans. We'll link that in here. But it also means that when you hire an employee, you have to put a lot of money away for the employee as well. But, if you put things in place before you hire your employee, maybe you change to a simple plan, which means that less money goes in and the employee has to put money in for you to put money in for them, then that way, you can save yourself some money on that end. But, here's the thing. If you are above the 157.5 or the 315, if you're married filing joint, let's say that your profit is $100,000 a year. You are looking at a $20,000 tax deduction if you do this correctly. So, let's say that, you're going to pay for Gusto and you pay a little bit for workers' comp, which is deductible, and Gusto is deductible. And you pay unemployment tax, which is deductible.
Maybe you spend an hour or two talking to your CPA, your accountant, to make sure that everything's lined up in order before you do it. It's like, let's say $400 right there.
Which is deductible.
Accountants love saying that.
You change your retirement plan. So you're putting, let's say you put 3% of your employees' wages into a retirement plan for them, which is deductible. And you're also going to get this $20,000 tax deduction. So, I think that this is really something, this is going to more than pay for itself. Okay. If you're making, if you've got a $20,000 tax deduction, you're in that range, right? That we're talking about, like the, above the 157. You're probably in the 25% tax bracket. So this, or 24% tax bracket. So this is going to save you, about $5,000 in taxes. Okay. So if you kind of think about, you might pay your accountant a couple $100, you're going to pay Gusto a couple $100, you're going to save $5,000 in taxes.
And if you're going to be a strictly service-based company, the only way you can really scale
is to hire people.
That's the best way. Especially if you can bill out the work directly, or you get more of your time to bill out directly, you can increase your profits by hiring someone. So it's something that if you have an irrational fear, you really need to talk to, come to the Small Biz Life group, start talking to people. You have to have your ducks in a row. But all sorts of businesses do this all of the time. There should not be an irrational fear.
Right. And that's the thing, if you do not have some sort of accounting system, like QuickBooks or Xero, you need to get one for 2018 because managing your profit is going to be incredibly important. Because like I said, if you go over that $1, so if you are single and your total taxable income is $157,501, you get no tax deduction if you don't have employees. If you're a service-based business or you're a lawyer, an accountant, in the medical field, there's this whole list of people that they can't get it no matter what.
It's a rationally large list.
Right. You get nothing. You get no 20% tax deduction, whether or not you have employees. So managing your profit is going to be critically important, especially if your taxable income is near that range. Okay, now that's not total income, that's taxable income. So that's things like, add up all your sources of income, subtract things like your health insurance, subtract things like your retirement, subtract, the new standard deduction or your itemized deductions. Remember that number's going up. It's $12,000 for single and $24,000 married filing joint. So that, that's going to lower your income as well. But it's really important. I know we have a bunch of listeners who are not working with an accountant because you're not willing to spend like the $400 to $600 that it would cost you to, sit down and talk to one. You're going to want to have somebody that is managing this for you and helping you work through this. Because like I said, this is the difference between, getting a $20,000 tax write-off and not.
Especially once you start making profit. Once you start making profit and you start making decisions about growth, if you're doing those blind, there are so many regulations on the book, some of which will contradict each other. You need, there's a reason why you need professional services.
Right. And that's the thing. And it's like, we are, with our HQ members, we are updating them on a regular basis when things are changing. I've already had this talk with them. But I think that, it's really important that you have somebody working with you directly. It doesn't matter if you're on somebody's email list or, if you're in the HQ group, you still want to have somebody that knows your numbers specifically.
Yeah.
Okay. So I think it's critically important that you do that.
It's kind of like psychiatry. There's only so much you can do without knowing all of the backstory.
Yeah, exactly. So we hope that this gets you thinking about employees. If you've got questions about any of this stuff, feel free to hop into our Facebook group. Facebook.com/group/smallbizlife. Our HQ members, you've got your own way to get a hold of us. But I think it's critically important that you start thinking about these things. Yeah. So thank you so much. We'll see you next time.
This was Small Biz Life.